got you, Fabio, after the live stream. I'll take care of it after the live. Yeah, don't worry about it. You'll get it. You'll get it right after the stream. It'll come to you via Patreon. Anyways, in the messages, if you don't know where it is, it's on the left-hand side of the screen, right under your profile. It'll say messages. You should see me pop up after the stream. All right, good morning, everybody. We're looking at a few things. Oil is literally like crumbling to the downside. The only thing Zero Hedge has on it is the fact that algos are jumping all over the momentum, which is, I can understand that, but for some reason, like it's got way more momentum coming to the downside than it did on the breakout. And when stuff like that happens, that generally has my attention. Excuse me. But yeah, it's literally just coming crumbling down. Meanwhile, Run Mountains found a trade long dollar, Aussie dollar. The DXY is currently sitting at 0.17% in the negative, whereas your Aussie is up 0.3% to the positive. Entry would have been probably roughly around this bearish candle's open. You could still potentially take the entry, but your risk to reward is a lot less better. Obviously, he probably entered on this move lower right here, and he's probably going to take profits roughly around 6.3, 6.17. So yeah, that's a good eye. It's good trading. This is not normally a trade that I would tell anybody to get long in. Obviously, you're making fresh yearly lows. Momentum is to the downside. I currently have a short position on. However, he is correct. As long as the Aussie dollar remains stronger than the dollar, this will go up. It's an arbitrage opportunity. It's not priced correctly, if you will. So this will go up. How far? I don't know, but it will go up. That's a good eye. Anytime you spot that, you take that trade because, I mean, it's inevitable. It's one of those things like I was discussing the other day. If you have one currency that is stronger than the other currency, then the stronger currency will move in the upside direction. It has to. It's stronger. Think about it. If they're trading together, right, which in this case it is, you got Aussie as the base currency, USD is the quote currency, and the base currency is stronger than the quote currency. So price literally has to go up. This move down right here would have been a fantastic entry opportunity. But like I said, I'm sitting in a short position on it, so I can't get long. But it was an awesome opportunity. Good eye, Mr. Run Mountains. Once again, you are doing fantastic, bro. Keep up the good work. But yeah, always take that trade. When you have this kind of screw-aroundery, if you will, you know what I'm saying? This is just to freak people out. Oh, the asset's been bearish and this and that. But I just realized the other day that I don't have up-to-date timing on my futures, currency futures, or any futures for that matter. You can see if I hover the mouse over on this 5-minute candle, it still says 9:15. So I'm exactly 15 minutes delayed on data, but I have real data over here, right? And I can find Euro or Aussie futures right there. And we can go take a look at them. /6A Australian dollar futures. We just got to find the day open and we can go from there. It's at 5 p.m. But the futures are different. Forex opens at 5 p.m. But yeah, right in here is your open. right there to be exact, and it's definitely up on the day. So for that trade to work, obviously Aussie needs to stay at least, 0.30 high versus dollar negative. As long as that stays the fact, you will get a move up on the Aussie dollar. So good freaking eye. I love it when people that are in the Discord find trading opportunities like that. So this is what he's seeing right here. If you are concerned or don't understand what I'm talking about, this is the Australian dollar future. This is the DXY. As you can clearly see, even though I'm on a lag, we got 0.27% to the up, to the green side, up on the day, and the dollar is 0.19 negative. But yet, Aussie dollar, the pair, is not trading like that, or wasn't, I should say. It was actually trading like it was going to make a down move right here. So this would have been a fantastic entry opportunity because, that would not have changed in the percentage that much as far as how much Aussie's up. But we'll see what happens with it. Bitcoin making a run up to daily res. I don't know what's gotten into Bitcoin lately, why it's all of a sudden just gaining in strength, but there you go. Absolutely above daily res. So is this thing going to go make a run at those highs from the other day? I wouldn't doubt it a bit. Yeah, I mean, I don't see anything else to stop it from doing that, really and truly. It did look like we were going to lose it, but with the S&P 500 opening up on the day, let's go ahead and get our daily range is fixed so that way we know what's going to happen today. I've already looked. We got $27 expected move to the upside. So right here is your open. We want to go up $27. Now this can be breached. Don't just short it unless you see an actual reaction. Right there, and then let's get $27 down, $28 down. It's just an estimate. It's not got to be exact. All right. So there you go. That is your S&P's expected move, high to low. Generally, typically what I do is if we're at some kind of major resistance, which you do have daily res sitting right there. Got daily res sitting there too, but obviously if you get a push up to here, then it might roll over and it might not. I don't know if I still have them, but I'll go over here and show you case in point. Yes, I do. All right, beautiful. So the white line is yesterday's expected move to the upside. And right in through here, I was waiting on this, waiting and waiting for it to test the upper edge of the expected daily range, and it just dropped. So I was looking for a short, but it would have been up here. So, and this happened at the end of the day, 15 minutes before the market closed. You got this up here. So you did tag the expected move, kind of rolled off of it, middle of the night, 5:30 a.m. Finally finds support and bounces. Now we are testing it again. The bonds are moving up. I mean, yields are moving up again, but not drastically. Actually, they've come off at resistance. at daily res. So your 30 years come off at daily res. 20 years come off at daily res. 10 years down on the day. So a lift in the 10 year or the TLT, I think is the 20 year. Yeah, it's the 20 year. So if you get a lift in on this or on bond futures themselves, like the ZB1 or /ZB on toss, daily support 110 spot 24. If that holds, that could help equities get a rally today. But oil is a trade that I've already taken and lost on. So I don't know if I'll be doing any other. I mean, obviously I'll be looking for option trades because I don't have any positions on but one. I ended up closing. Oh, where is it? There it is. I ended up closing the AMD trade because, yeah, I knew I wanted to get long this, but it's just been all over the place. It didn't really give me an actual area to watch. When we was pulling down here, I was like, well, it may run down below the day. Right here is your low of day. But it didn't even make it down to that little spot right there. But maybe we'll buy some calls on the sweet crude futures options because you can trade options on futures, on some futures. Some futures products have options, and they move a little bit slower than the actual the futures market itself. Like 2 contracts on the micro, I think that's like $4 a tick, and each tick is 1 cent. It just needs to move 1 cent for you to lose $4. That doesn't sound like a lot, but oil can drop 35, 40 cents in one 5-minute candle. It can move. In fact, it does move. Right here is 81.68. You're looking at over a 40-cent move right there. So do the math. That's $160 and that little move right there. So and that's on 2 contracts. Be very careful. And that's on the micros, the micro crude oil futures. They move quick. But yeah, I was expecting a pullback. This rapid descent. This is actually more volatile than the move to the upside was. We can calculate that by using this little tool right here. We drop down to the hourly. We can calculate just how volatile the asset is. This is where it was bouncing down around monthly support. This is where it breached, right? Broke out. And then this is your bullish momentum. You can notice how the bands, how price stay within the bands all the way up. Even on this volatile move right here to the downside, you still remained inside the bands. Look where we are now. Not only did you breach the bands, like you're trading under them. Like that is boom, boom, boom. A lot of stops getting taken out right through there. Excuse me. V8's kicking in. I love V8s. I drink them every morning. Good source of vitamin C and salt. All right. So yeah, we might have missed our little move on that to the upside. Let's see how the hour closes. See how the hour closes and then look and see if we can get any retests on that. What is up, everybody? Chat's nice and lively this morning. That's fantastic. Thank you guys so much for being here. But yeah, good call out on that Aussie dollar on that Aussie dollar long, man. That's good stuff. Good stuff. We'll see where I don't know where your take profit is, but I'm holding a short on Bitcoin, but it's just a hedge. So even if it does get up there, it stops me out. I'm not gonna lose any money on it because my stop is at break even. But it's just a hedge, so it's not as sizable of a position as it would be if I had it been just a normal day trade short. Which, in hindsight, now obviously I wish I would have done instead. Just take a normal day trade short and just leave it bitch open. You know what I mean? Don't take any profits on it because then you'll be levered up. You could have got a 200% move on those lows right there. That's more than doubling your account. That's quadrupling your account. But it would have just doubled your account because unless you entered again at 100%, closed the profits, took the trade again, and got another 100% move, then you would have made quadruple. But still, that ain't bad. That's a pretty good move to the downside. Looks like it may be finding a little bit of resistance at 28,067. So the majority of that resistance is going to be coming from 28,000, which is a big figure number. A lot of buy and sell orders take place at round numbers. A lot of trading funds love round numbers. That's why round numbers can affect price sometimes. Did you get up to the 200? You did not. So yeah, it's already on the move. Obviously buying hourly support would have been what you done there. So anywhere pushing into this candle here would have been the opportunity to buy if you were looking to buy. Let's see where daily is. The daily open, that is. So your daily open happened there. So that would also be the day of low of day. And look what time it reversed. 3 a.m. Your London session open. Yeah. Would have been trading at the low of day. That would have been an easy buy. I mean, the momentum is up still. I don't really like to get bearish on anything unless you're trading below the daily 21 exponential moving average. And you can see that you broke right back above. Where's your 200 week? 200 weeks acting as res, but if this is real bullish momentum and not just a BART to get bulls pulled off sides, then you're gonna break right through that level, right? If this is real bullish momentum, if this is legit buyers coming in out of fear from the bonds, the bond market is going crazy. Just to put things into perspective for you guys. Look at the TLT. Let's just pull up the yearly chart. I want you to look at this. All right. There you go. So the quickest rate hikes in history came from 2022 into 2023. So we went higher quicker than ever before on the Fed funds rate. And the bond market did not like that. So what you have here is you have a massive breakdown on bonds, treasuries, yields moving higher. So this could mean that a lot of people right now are sitting in a lot of pain. A lot of banks are setting in massive losses due to this move. So if they have to start unwinding based on whatever, like what the catalyst could be is simple. You got normal people nowadays with cell phones, they can transfer money from a bank account to treasuries in no time, right? They're paying 5% on a 3-month annum basis. Why not Why not put your money there? And that way you can make 5% on it in a year's time instead of, leaving it in a basic checking account, which doesn't pay anything really. Where that's the smart thing to do. And with the internet, all you got to do is Google it, how to buy treasuries, and boom. But obviously, you would do that more or less with your savings than not your checking account, because you operate from your checking account. Once you put it in, you leave it in, right, to maturity. So once the maturity happens, you can take that money and reinvest it. So they're losing a pretty big percent on just people putting their money in checking accounts, right? That's what they're losing. So if they have to close down because of that, they're going to have to unwind those long positions. Oh my God. You talking about a free fall? This is a free fall. I mean, it's the biggest move according to the data that I have that's ever been done on the TLT. It's a yearly chart. Each one of these candles is a year. So you can see bonds are nice and steadily moving to the upside like they're supposed to do, right? And then boom, down. Not good. Not good at all. So the move has already happened, but if every bank out there has to unwind their long positions, you could see this thing hit down in the 50s. So much more damage could be done. Everybody was looking for, what did the Fed break? Well, the Fed broke the bond market for sure, right? For sure, it's broken. You've never seen a move like this before on it, ever. So, yeah, the Fed has broken the bond market. And that's where the concerns lie as of right now. But if the trade is to sell bonds and buy tech, the S&P 500 could still rally, right? So this is the thing here. You got Apple trading, made fresh all-time highs, but trading under yearly resistance because of the news that happened in China, where the China executives or Chinese government employees are not allowed to own iPhones anymore. That put a pretty nice little hurting on the Apple stock price. But it does look to be finding a bottom down here. And it's only normal that people will buy Apple at the 200 exponential on a daily time frame. Of course, why not? I mean, the trade is still long growth, short bond, right? So I do expect a bounce. I do expect a bounce on most of these assets. Meta, on the other hand, has not even, like, Meta is not even structured bearish yet. Meta is still structured bullishly. Like, I've taken multiple shorts on this, and one was a successful one, and then one wasn't. So I am currently not holding a short on it now. I wish I was. I am expecting it to break down a little bit because it hasn't broken down as much as other ones, right? Like, it's only down 8%, whereas Apple is down 12%. Netflix isn't part of the Magnificent Seven, but it is part of FANG, right? And FANG stocks are still a thing. You're down 23%. That's not off the all-time highs, mind you. That's off of the highs that we put in July. Those July highs. Your all-time highs on Netflix are way up there in the $700 range. So you're still trading 50% off of the highs on Netflix. So Netflix needs to change its business model, or it's going to end up looking like Disney. Tesla, also structured bullish, had a really fantastic day yesterday. Even though we were expecting Tesla, or are expecting Tesla to experience a little pullback, based on the fact that they're not going to hit their estimates as far as deliveries are concerned. Deliveries is where that equals cash flow. So if they're down on deliveries, they're going to be down on earnings as well. According to that thing that Johan posted in the Discord the other day. So, but Tesla yesterday had a magnificent rally, and Microsoft not doing so hot. This one looks the most bearish to me, and that's pretty much it. Google not even under the 21. I mean, Google is bullish. Obviously, retail likes to try to pick tops, and I'm sure there are a lot of people buying puts on them. We can go see right now just how many puts are being bought. Let's go look at Nvidia first. See if they're buying calls or see if they're buying puts. Right there, they're buying calls. Now you got more call selling going on than call buying, but that doesn't mean that they're opening bearish positions. It could be that they're closing profitable bullish positions, okay? Which could, in a sense, put in a little bit more selling pressure, but there's also a big number of puts being sold. 140,000 contracts already. The market just opened. So, yeah, there's a lot of activity happening in NVIDIA. I can't get that pretty. 26,000 calls bought already today. All right, let's go look at Goog. L. All right, so nowhere near the volume trading inside of Google. Meta, 65,000 contracts, pretty heavy volume trading in there. And then Tesla, 432,000. Jesus. That's massive volumes. Once again, we have, more volume to the upside as far as buying going on, and more volume on the call side of selling than you have buying. But that number can change throughout the day. But right now, it's definitely leaning more to the call side. We know that these are sold calls because it's traded at the bid or below. You can only be a seller on the bid. You cannot sell on the ask. You can get sold. You can get filled on the ask if it's a very thin market, but it's not likely to happen. All right. It's not likely to happen. Like in a penny stock, it's possible to get filled on the ask, to sell on the ask, but usually when you sell, you're selling on the bid. When you're buying on the ask. So anything that's traded at the ask or above, which means if they're willing to pay more than the ask, that is rushing the marketplace. Right? That means they are rushing the marketplace. And then you have the smart traders, or the traders that do what I do and trade between the market. It's still leaning more heavily to the call side than the put side. So it looks like we may see a rally again on Tesla today. But we shall see. We shall see. But, market making funds have to, if whatever you do on like when you buy calls, they have to sell 100 shares. They have to stay delta neutral in order to basically do that. If their market making if they're participating in options, then they'll stay delta neutral by buying and selling shares of stock. And on an asset, as big as Tesla, there is plenty of liquidity for them to do that. Plenty of liquidity for that to happen. All right, everything running smoothly. Good morning, good morning. Entered right. You pointed out. Yep, good stuff. Nearing take profit now. Good. That's awesome. Hello there. After joining the Patreon, yeah, I got you. I got you for sure. Your secret is safe with me. My secret. Yeah, I don't have many secrets, my friend. Maybe Bitcoin flips quarterly supply into support. It is possible. Like I said, it's just is it actual buying pressure or is this something else? But I mean, it looks like buying pressure. You're trading inside of a massive range. You've been trading in this range for a while. This was the range down here. So obviously your March candle broke out. That's your breakout candle. So now your range would be roughly 23,100 up to 30,500. So you're just trading in a massive range. The quarterly looks rough for sure. I mean, you got quarterly supply up there. That's where Bitcoin rolled over. And then we also have yearly supply setting just above that. So big levels of resistance. Let's see if it can even get broken out of today. Even though all the bullish factors that we have on the SPOOs, trading right under that 200, right under it, basically around today's midpoint. And yesterday's range high expectations. So these white lines are today's expectations. So give it a minute. Let it see if it can pull down there to 42.31. If it does, that might be an optimal buying opportunity. And I say might because if you're closing hourlies under that, then you leave it be. All right, you leave it alone. You take one chance at it. If you get stopped out, you leave it. You wait till tomorrow. There's still one more day of trading left, and that's tomorrow. Tomorrow is NFP, non-farm payrolls. And we did get some economic data today. We got initial jobless claims, which always comes out before NFP. The job market's still strong. Labor market is still strong. I mean, you got a little bit higher than last month, but you came a little bit under what was expected there. And then, the trade balance came in a little bit lower than expected, which is bullish for the dollar. So, yeah, all of this should be bullish for the dollar. But the dollar is having a difficult time getting any kind of bullish momentum going here. And then let's go look back at oil. Oil's down 1.3% on the day. Huge move down the last couple days. Yesterday was a massive move to the downside. Look at that candle. There would have been support, so it's a legit breakdown. That's just what I call a legit breakdown. When there is a level that should act as support and the candle ends up making it its biatch, then that's a legit break. You do not expect it to break back above, usually. You usually get downside continuation, and we've gotten that today. So even though we're seeing a little move to the upside right now, you got an old level over here, which to be honest with you, I wouldn't even use. I would just call that resistance. Here's the breakout, and then you broke out above that. So, I mean, that's probably what I would say. And the 100, obviously. The 100 EMA right there. Big breakout, huge oil move to the upside, increased demand because of the summertime. We haven't seen any raising at the pump. Well, not as far as where I live. Gas has been pretty steady around the $3 mark, $3.50 mark. So you need a really big move in oil to cause gas prices to start raging to the upside. But in my opinion, even though that we're under the 21, and I would be looking for near-term short-sided day trades, since yesterday we got such a massive move to the downside, that would eliminate any downside day trade for me. So I would need a pullback to some kind of resistance. We have one right here, and that puts it roughly around 83.79 or 83.73, which is today's high of day. So you've already tested resistance and rolled over in the middle of the night, which sucks because we want to trade now. But it does look like it's that little spike to the upside is having difficulty at 2-week demand. Two-week demand is usually a level that we would expect to hold as support, right? Not resistance. It is a 5-minute time frame, so I mean, you can get spikes through many of them on a 5-minute time frame basis and still end up holding because it's about the close. How does the 2-week close? We got 1 day, 7 hours left on this close. So if we close under this, then what do? We expect price to move down to 79,930. Yeah, it's possible. Do I believe it's going to close under it? No, I don't. I think it's going to bounce up and potentially close around the 83.39 area. But the problem is getting positioned. Where do I position myself? How do I position myself? It has to be here or here. So it looks like I'm not going to get a trade-off on oil today. I don't want to short it now after it's had such a massive move to the downside, but algos are hitting momentum. So anything that trades with any kind of momentum at all, algos jump on board. So it could still see a lot more move to the downside, but I would like it to be justified by some kind of data. And sometimes there just isn't any data that says why oil had such a significant drop after being so bullish for so long. I mean, you're talking a couple months of bullish price action there on oil. All right, 1, 2, 3, 4, straight up. So 1 month pullback, Q4. Yeah, it's just the beginning of the month, and this is the size candle you've already made. We're 5 days into this new month. 5 days. So Monday, October 2nd. So really and truly, you're 3 days into this monthly candle. And the range is almost as big as last month's candle. It's not as big as because you didn't take out the high. It closed down here instead of on the highs. But still, as far as body-wise, you've taken out last month's low. So what I like to do is I like to look, well, where is the next liquidation point on a monthly time base? That's all the way down to $77. Can it go down there? Yeah. Will it? Not if it's going to stay bullish, and that's a legit breakout. Once again, if I bring this over here at resistance, you can see that that is a legit breakout. But according to my own rules, this candle, if it closes down in this area under this, then you have what's called a bull trap, which means that oil could fall right back into the range from $75, actually much lower, from $68 to $85. So a lot of two-sided trade would happen in that case. But I think it's an overshoot on the monthly low. And until I have like more data to suggest something else is going on, then that's the way I'm going to treat it. So I am looking for long positions. I mean, the rollover didn't happen quick, right? It was 4 weeks. 4 weeks. Weekly res right here. Test it, failed. Test it again, failed. And then you just rolled over. So the short entry would have been 90.29 because that's the highest resistance. And on this week, as you traded up into that, that's where you would have been looking for your short entry if you were bearish, which I didn't know many people that were bearish on oil. Which could be the reason for the rapid move to the downside. A lot of late bulls jumping in on these swing lows, right? Because this was a straight liquidation run right here. Boom, taking out this swing low. Then we got that last move to the upside and then straight down. So that would be your accumulation or your distribution phase right in there. Let's get it on the daily. Don't really have a 3 drive topping formation, but you do have a distribution phase right here. Right? There's your high, then an insignificant high, and then it rolls over. So yeah, I didn't short it though. I was actually waiting on a pullback to get long, but I was unable to get long because of price action yesterday. I was watching this level as support, seeing if it was going to hold, and it did not. It blasted right through it like it wasn't even there. And that's a daily support. Like, that's no joke. Right there was the first time we tested it. So obviously I did like it at that point, but I wanted to see it hold again. And then once we got the much deeper stab and lower close, I just left it alone. I was like, nah, not happening, not playing with that. So the next short on oil could be around 83, 185. It's just like I said, it's already probably done the damage it's going to do to the downside if it's going to remain bullish. And there is nothing that I can find as far as macro wise why oil would have such a massive drop like that. Unless Biden unleashed, I don't know, several million barrels of oil onto the open market, there should not have been such a big move like that. And we won't know that until we get inventories. Still holding Bitcoin from 26.3, which is nice, seeing how it's trading at 28 almost. Yeah, I mean, you are trading at 28. 27,999 is 28. It's as close to 28 as you can get. This is daily res right here that it's playing around with. Would I buy it right here? No. No, I wouldn't have. Buying it is always going to be done at the lows, daily supports. Unfortunately, you got one, and then the second day closed lower. So buying that, you would have had to wait for the retest or wait for the price to get back up in there. And then at that point, you got such a long wick to the downside. It's like, how do you justify your stop? But you did good. So that would be your daily support. And you can see how it was just so choppy down in there and wonky. But it did finally and ultimately give you a buying opportunity. Multiple hourly closes under a daily res means you're probably going to see price go lower. One or two doesn't matter, especially when you take the high out of the breakdown candle. That has to give you credence to the upside, or lend credence to the upside. Right there, this candle went higher. So what happens the very next hourly not only goes higher, but it closes up. So that's your moment of truth right there, that daily res or daily support is holding. All of this, people were shorting it, and there's the breakout, there's your retest, and there's your thrust. Pullback, and boom. So it looks okay. It really does. But I am going to just see what happens with it. If my short gets stopped out, I'll let it, right? No big deal. Because it was only a hedge. I own a ton of Bitcoin, so I want it to go much higher. I would love to see Bitcoin trading at 3 digits. Triple digit Bitcoin be a dream come true for a lot of people, because a lot of people are hodling at 50,000. Yeah, looks good, looks good. Um, yeah, Michelle's been doing awesome too. She's been killing it. BTC, do you see a head and shoulders on the 2 hour broke neckline yesterday? I can see it on the 1 hour. I can see it right there, inverse head and shoulders. Right? Shoulder, head, shoulder, neckline. So I'm not a pattern trader though. I see them and I'll call them out if I see them sometimes, but um I thought this was just going to be a stick a knife in it and call me done. Liquidating this swing high right here and then getting such a bearish reaction. I figured this was just going to go up, find her, and then dump. Boom. That's what I thought was going to happen. But equities trading at where they're trading at, like I said, right at the 200, I do expect support. So if we lose the 200 and just keep going, then that means the market is going to be much more afraid of the bond market than I anticipated. Because tech hasn't really broken down yet. So, and we know that it's tech that's holding the marketplace up, because all we got to do is go look at the Russell, which is your mid to small caps. You're negative on the year. Go look at the Dow. You're negative on the year, right? The NASDAQ is what's holding this market up. Well, I don't have it on the NDX, but here, NDX, that's your yearly rate. So this is all tech. This rally is nothing but growth, which is tech. Growth and tech are synonymous. When you hear the word growth, they're really talking about tech. They're talking about the Magnificent Seven: Amazon, Apple, Microsoft, Netflix, all those. Tesla, Nvidia. They just, the breakdown that we see here, it looks like, there could be something here, but it's not uber bearish either. Like, you've not even tested the 200 on the NASDAQ. Whereas the S&P is trading under the 200 right now. But this needs to break down in order for the S&P to really get going. If it is going to get going back to the downside, tech is going to have to break down. And I really don't see where people can run to outside of growth to seek the kind of alpha that they've been able to get for the last couple years, all right? Like, nothing has outperformed these stocks. Nothing. This year alone, there's your move on Apple, right? And this is coming out of a uber bear market where the world was going to end. You remember that? Yeah, I do. No, I think this correction is just that, a correction, until we see more data on inflation. If inflation and basically your head or your headline number, your core, is going to be different based on oil. But if oil continues to rock and roll to the upside and the dollar continues to be strong, then tech will roll over. Looks like I should have got long oil after all. It just didn't give me an entry. I mean, I tried a long entry, and obviously that candle right there stopped me out. And then, so it happens to me too. Happens to me too, but I would like to get long oil. It's just finding that right spot to do it. 2-week demand looks like a fantastic place to do it. So I will keep my eyes open on 82.47. Now there's a different, slower way that we could do this. Give me 1 second. It's going to appear to be a blackout, but it's not. All right. I used to have the scene set up, but it's not now. So it looks like a blackout, but it's not. But we can trade oil on the futures side. MCL, which is the micro crude oil futures, and then trade the option contracts. So you can come out here like 70 days and buy an in the money $80.75 call. Look at the spread on that though. We got to give oil time to chill out. That spread is god awful. Also, if you look at this, that's volume and open interest. Not much going on there. So I wouldn't trade this if the spread remains this wide. But it will tighten up. The reason it's so wide is based on the volatility that we've seen happen in the last few days. This spread it gets a lot tighter. So we just got to let the spread tighten up. And until that happens, there's nobody going to be trading that. Nobody. Right? I mean, that's just too wide of a spread. You could lose $2 just by getting in and getting out. Just by getting in and getting out. You're already done. Over with. So we got Walmart short. That's the only trade I'm currently holding right now, and it's in the red. Let's go give it a shot or go give it a look. Yeah, it's just chopping sideways here. Shorting Walmart based on the fact that it made all-time highs and then instantly rolled over. It did it here and it did it here. So we're looking for that 3-drive topping formation, that springboard, if you will. So if this is going to be a distribution formation, which it is, I mean, it fits the build 100%. There's your old all-time high right there. So you make an insignificant high there, roll over, insignificant high, roll over, and significant high, and roll over. So we'll see if it's done. There's plenty of time. I can hold it as far as 163.07. See if we get a breakout above that, then you're probably going to go up and make fresh all-time highs. The trend is still bullish and still up. I don't think you've broken any trend line to the downside yet. I mean, it's working on it right now, but that's a pretty parabolic trend line. Retail is still strong, right? People are still buying stuff, so it's probably not the best trade in the world, but we'll give it a shot. If we go look at the retail sector, it's like a given. You're like, yeah, of course I want to short that, right? This is your retail ETF. So, I mean, it's down. It's negative on the year. And then if you go look at Target, same demographic, but Target's got its own problems, right? Right. It's switched from, just being profitable, being a good, nice company to joining the extreme fringe left, and boom, business goes down. Capitalism doesn't like that, right? Capitalism does not like socialism. So when your company comes out and starts doing stuff like that, yeah, I'm not going to get into the details of what they did, but what they did caused negative effect. Just simply, basically the same thing that happened to Bud Light. But anyways, Target's down. And then what's Costco? CSCO? Let's Cisco. Costco. Costco's still doing good. Costco's still trading up there on the highs. And that's, Costco, Target, Walmart, they're like all the same thing, right? They're all the same thing. It's like a big store. I mean, Costco's probably more in line with Sam's, but guess who owns Sam's? Walmart. Yeah. Yep. So it's basically the same thing. But the retail ETF getting absolutely annihilated. Consumer discretion. There's too much Tesla in consumer discretion. That's why it's up on the year. If you take Tesla out of XLY, this thing would probably be way down in here. Materials is just turned negative on the year. Let's go look at the financials. Financials are getting tore up from the floor up. I mean, just look at this. PNC, BAC made fresh lows than when the crisis happened. And when I say crisis, I do that with air finger quotes because 3 banks went down. 2 of them were crypto banks, right? So when you got 4,500 banks in the country and you lose 3, I don't think that qualifies as a crisis. But other people still continue to call it the banking crisis of 2023. We're below those lows on BAC, which is Bank of America. It's a huge bank. Wells Fargo, another big bank, down on the year. Schwab down on the year. JPM, there might be some meat on this bone. Right? This guy's still up on the year. It's up, but it's barely up, but it's still up on the year. So if something is massively bad going to happen to the banking sector, then JPM is the one I like the best. I mean, you don't get much better than that. You go up there and you test yearly res, and then you roll right the F over. It's a beautiful thing. How nice it would have been to throw some puts up there at 158. Boom, you're trading at 142. That's a $12 move lower. Sorry, that's more than that. 58, 48 would be 10. So, yeah. A $16 move lower just from tagging yearly res. Because the banking crisis happened in March. There's that low right there. So this one is still up on the air, still has plenty of meat on the bone to get back down to those lows. 123, that's a 20-something dollar move right there. Almost 20-something dollar move. It's $19 of potential downside if the yields continue to climb. If yields continue to climb, I do figure some of these banks will get hit. And then finally, we'll go look at the next biggest loser. Citigroup took out bear market lows. October 2022. There's your March lows. This thing has went on to take out the bear market lows. But there's your pandemic. I mean, it's getting close to those lows. Citigroup not looking good. The market knows. The market knows. It can sniff that crap out long before anybody else. That's why stuff like this, you can go out there and sell calls on up pops 3 or 4 days to the upside, then go out of the money and sell that $48 call. It's free money. We can't do it now because they got earnings coming up, but we could go 8 days out. That's not very long in duration. There's not much premium out here on the edge of the expected move either. One could sell a couple of them, but I wouldn't recommend it because those are unlimited risk trades. You can see a lot of people out there on the 11 and 15 deltas, a lot of people on the 19 delta, and then a lot of people setting roughly right in the $41 area. There's definitely a lot of open interest, but these trades were probably put on long ago. If there was a little bit more premium on it, I would go ahead and sell that 42. But we've only popped one day, too. Today's the only day that you've gotten anything going on Citigroup, and it's not really much of anything. All right, yesterday you had an up day. Today you're trading inside yesterday's range. So maybe if you could get back up to 41, 42, then you could look to sell those 46s or 48s. And there'll be more premium on them. USD JPY 149.83 looking real nice today. Thanks BOJ LOL. Yeah, I still haven't heard anything whether or not they did or not, but you got dollar down 2 days in a row, but it's not down massively. Not like it would be if the BOJ did intervene like they did last time. They sold dollars, and that really created a nasty move lower. But even this day was very volatile. I mean, to see USD JPY hit 200 pip days is just insane to me. Insane. That was a 626 pip day. Jesus. Yeah, a lot of volatility surrounding this thing. A lot of retail shorts also. Keep that in mind, please. If you're shorting, $85% of their clients are short. 85%. This thing, as long as the BOJ doesn't intervene, is going higher. It's probably going to run that high. At 152 high. Just because of the amount of people that are still net short this thing. But then again, maybe they get lucky this time, right? Retail does get lucky every now and then. That's why they continue to try to sell tops and buy bottoms. They're not profitable, right? They're not profitable. They catch a trade every now and then, and they just keep doing the same thing over and over again. And then they forget about all the losers that they did, going up into this. Like, this would have been a good trade based on the fact that it was Corley Res. And a lot of people inside the Trade Talk community took this short, and it was a good short, right? Based on resistance, based on the fact that it failed to close the daily above for like 5 days. So yeah, I was okay with the short being taken there. However, once we were started to make our climb back up to that level, people were looking to short it again. And I was essentially like, no, because there's just too many people, too much retail short this asset. They're expecting it to go down, and the carry trade is still too good. You still have negative 10 on the interest rate with a 5.5 interest rate with the US. That's a whole 5 points, guys, of carry to just buy and hold this asset. That is attractive to buyers, but not really attractive at 150, right? Not really attractive at 150 because there's concern of BOJ intervention up at these levels. Whether it happens or not, it's anybody's guess. I wouldn't even say that this is the BOJ intervening. You know what I say this is? I say this is all of these billionaires that have been holding the long carry trade just said, I'm out at 150. And then we'll see what happens, what the BOJ says. And if they don't change anything, if they don't stop yield curve control, if they don't do anything different, then we'll just wait for the pullback and we'll buy it again. That's what smart money does. That's what smart money does. That's how they act. But yeah, it was a nice little candle there, 250 plus pips, and it's like 280 pips to the downside, but it was almost sucked right back up. And then you had a very tiny yesterday that didn't do anything. And today you're getting a little bit of continuation off of that. I mean, there's the ETH level right there. It's just beautiful, right? Supply level, short there. You made a nice little day trade. But keep your ears open for BOJ. See what they say. Did they do anything? Will they announce? If they don't, nothing comes out, then you can bet your bottom dollar that this will go back up again because, like I said, it's just too attractive for the carry trade. Not quite at 150 though. Not quite at 150. Bitcoin's still struggling at daily res. We'll see if that remains the theme for the rest of the day, or does it ultimately break down, seeing how risk markets are taking a beating. I like I said, I have a short side bias on this, but just not down here, not this close to the 200. It does appear as if though the 200 is acting as resistance in this case, and if it is going to break down based on, the real rates going higher, then I don't, we could see it go much lower. But hang on. Let's see how close we are to the downside expected move. Oh my God, we're tagging it right now. So let's get our bids loaded up here. Let's get ready to buy this. Because that's the downside expected move on the daily range. And I think buyers will step up here. I don't have proof that they will. It's the 200. A lot of people will buy the S&P at the 200. But it needs to go a little bit lower. Let's get rid of these and then drop down. Get on down there. You can tag it. And we'll buy to open deuce. We'll see what happens. See if we get another move back to the upside. We do have a trend day as of right now. A down day, trend day. I'll show you with this chart. So here's your NQ down day, trend day. So down day, trend day. S&P, down day, trend day. So this trade might not work. Daily support is going to be right there. But we'll see. I'm figuring since tomorrow we're gonna get NFP, and since the numbers that we got today wasn't terrible, I figure you're probably gonna jump right back into the range and wait on tomorrow's jobs data. And once we get that, then we'll either A, break down, or B, break back up above that 200 exponential. What's up, KF? Hello, Armeek. Sean, what's up? Is Tesla looking to break out since it seems stronger than the rest of the stocks? I mean, one could argue that. Let me give this just a few more moments to see if it pulls away or if I got to close it down. I don't want to set a limit, or I don't want to set a stop loss down here just yet. If it trades away from it, then I'll keep it open and I'll set a stop loss, and then I'll go look at whatever. Setting a stop loss after this big candle right here, and that's a terrible fill. I wanted to be filled like right at the expected range lows. But you can see what it did on the SPX. I mean, right to it. These things don't track identical, obviously, but we'll see what happens. uh, were you tweeting Gareth Soloway and reminding him about his wrong predictions? Yeah, I know I shouldn't do that. It's a troll move, but yes, yeah. He's just too like I don't like people that go on Twitter and act like they're never freaking wrong. And he does that all the time. He's like every single one of his tweets are like, I told people this and this is what happened, blah blah. You know what I'm saying? It's like, no, no. Don't you remember calling the beginning of 2023 a bear market? Just a bear market bounce. And then, you know, the S&P 500 got within 5% of making fresh all-time highs. Now that you've gotten, what, 4 or 5 weeks of pullback, you're going to be like, I told you we weren't going to make fresh all-time highs. Yeah, he's the perfect person to troll. I don't trust any of them. Not many. There's a few on there that I follow and trust, but there's a lot of them I don't. Like, I don't see anybody showing like actual trades with open, real funded account, letting you see the fluctuations between their P&Ls, right? And they only post winning trades. The thing about this channel is we don't hit winning trades always. Sometimes we lose trades. And that happens live on screen right in front of your face. So you know if I'm horseshit or not. You know if I'm lying or not. Right here you go. I'm up 20% on the year. I'm up 20% on the year. I am up more than the S&P 500. And this number is going to grow. You take 2 steps forward, 1 step back. 2 steps forward, 1 step back. That's the way trading works. I don't care how good you are. That's the way it works. Because you don't know what price is going to do, ever. Nobody knows. There could be a sudden news headline piece that breaks out like right now and send this thing down another 20 points. Right? There's no way to tell what's going to happen. If you know, if what I think is correct, if my thesis is correct, then I'll either be proved right or I'll be proved wrong. My thesis is, since the numbers that we got today were not so bad, since tomorrow is NFP, usually you trade as an inside day, right? Right before NFP. NFP's when you get the big volatility day. So what? The S&P 500 trades down to its lower range expected move and then bounces back up into the range and trades as an inside day the rest of the day. And if that's the case, then I'll make a little bit of money today. If it's not the case, I'll have a losing day. I don't know where the crude oil losses went. Walmart must be tumbling because I was down over $50 on the day based on a crude oil trade I took earlier this morning. And for the fact that like this move right here is not big enough to wipe out a $50 move. But it could be ultimately. could end up being a very nice profitable day if my thesis is correct. We shall see. We shall see. And like the other guy, ICT, he's not the only one that can call market turnarounds, right? I do it all the time. All the time. Did you see the tweet from the short on the MES futures the other day? Literally called the top of the friggin' market. Can't remember when it was or what day it was, but it could have been right in here, or I don't know. I don't remember where it was, but there is a tweet on me, doing that. I do that often, right here. That's my short entry right there. This is, I sold 2 contracts. Once it broke down into here, got around this area of support, I took 1 contract off, moved my stop loss down to there. Boom. Done. Day's done. But the way it's trading, I don't think my thesis is going to be correct. But we'll give it a second here. I got it situated. Let's put it up here on review so that way we can send it if we have to. And I got it set on at market because sometimes when you have this set at limit, you'll hit send and it'll put a limit order up here when the candle's already dropped down there. So make sure if you're not going to use a stop loss, you put this to market and stop to close. Make sure here's your position right here. It shows that my open position is 2 contracts. So you want to make sure you have this set stop, sell to close, or buy to close. If you're in a short, it would be buy to close, however many contracts you're in it at market. So that way you don't have to put a stop loss out there. That way the spread doesn't stop you out. Because that move right there might have stopped me out. But it also means you could get really badly hurt if you do it this way. I have been badly hurt before. Because if you just get one of those flash candles that drops, like I said, 15 points, and then you finally get out, you're gonna have a massive loss on your hands. Instead of a decent day, it turned into a massacre. Yesterday I lost over $200 on that Nvidia trade and off of S&P trade. So yeah, 2 steps forward, 1 step back. If it doesn't start to go pretty soon, I'll close it out. Right? Because like it needs to go pretty soon. We got the dollar heading in our direction, which is down, so that's nice. Right? And the NASDAQ kind of playing around doing the same thing. There's the crude oil futures catching that bid on the day. Looks like it's going to be a trend day higher. Dollar is dropping right now as we speak. So that could give us a nice boost out of this area. And then I can set a stop loss at better than break even. But I can't set it yet. It needs to trade away from this area. The longer it stays here, the more of a chance that it's going to break down. And we don't want it to break down. For any new people that are just joining us, basically I'm in a long trade on the S&P 500 because this white line right here is the downside expected move for today. And we got NFP tomorrow. So I'm just taking the trade based on the fact that once we hit this move, maybe the S&P trades slowly back up into the range and then closes the day out as an inside day. All right? You did not take out yesterday's high. You have not taken out yesterday's low. So I'm banking on it hitting that and then just slowly moving back to the upside, maybe closing up in here somewhere today. But like I said, the longer it stays in this area, the more likely it is that I'm going to be wrong. I do not have a stop loss situated, but all I have to do is hit this send button right here and it will take me out of the trade at market. Dollar surging lower should help it out a little bit. So we've already gotten a 5-minute closure on this one here, which is the same exact thing that I am trading. But this is lagged a little bit. Because this literally on the intraday, this is building a bear flag. So yeah, people will sell down here because A, they don't know that it's at the expected range low on the day, and C, they just sell lows. Red days usually causes people to sell, and they shouldn't sell on red days. They should sell on green days when they're in profits. But you'd be surprised how many people do not do that. It's the big red candles that scares them into selling. And that's just for the people that are holding long S&P 500 positions based on the fact that they think that it's going to break back above the 200 exponential moving average, because that's also down here. We're under it currently right there. But generally this is a good area for people that, if anybody is going to buy, based on the fact that we're at a good area to buy, being at the 200, having one day down is okay. But it's been rapidly moving to the downside. Rapidly moving to the downside. This is the weekly expected low. So you're not far from that. The weekly expected move to the downside on this asset is right there. So couple bits of support here. And the expected range low on the day. Not a bad trade to take, but they do not always win. They do not always win. Nothing works in trading all the time. Obviously, a better entry would have been filled on that wick low, but I didn't get it there. It got it there. So what we're going to go ahead and do is I'm going to limit out one contract, and I'm just going to put a stop loss if I can get another pop to the upside. Just because I don't like this. I mean, the dollar's moving down. So that should be helping if this is going to move to the upside. This should be helping it. Got the volume weighted average price set at the monthly here, and you can see that price is having a difficult time getting back above the monthly volume weighted average price. That's essentially where it turned around today. It's the yields that's got this market freaked. But the yields rolled over today. Are they back to going up? Yes, they are. And that's the problem. 20 years back up. Two years down. 10 years down a little bit. 30 years moving higher. And then typically also I want to see a rise in volume here. Excuse me for doing that right in the mic. I apologize. But volume is decreasing. I would like to see volume increasing, as that could suggest a trend change. Since we got that big spike in volume to the downside with decreasing volume, it's just setting up a bear flag, essentially. There's the stop run on the lows, downside continuation. So if it doesn't bounce now, we're getting out. $42.62 spot 50 is where my stop will go. No. What the hell just happened? I was trying to move the stop loss down. Oh my God. That is so annoying. You see what I mean by that? Like my entry was, it didn't even come close to my entry, and my stop loss was below my entry, and it just took me out. At the same time, I was trying to move the stop loss lower since it did not put it in at the right price. But we'll give it a second here. I mean, we're out for a minimal loss. Down here, it was like $50. But there is one trade open over here, and that's Walmart. So that's what's affecting the price. Walmart must be dumping. Yeah, it's not dumping, but it is going down, which is good. Like to see this have downside continuation. Now we can go look at Tesla since I got stopped out of that trade. I don't necessarily want to jump back in it because it's not doing what I wanted it to do, but it might do it soon. It's also 11 o'clock in the day, so the biggest trading move has already occurred on the day, and that was down. And now you're getting downside continuation, so yeah, probably just gonna call that a day. We still have the Walmart trade open. Let's go look at Tesla. So Tesla got, there was a bit of news that, or I don't know if it was a news or a rumor, but I can pull it up real fast. If I can find it right there. So Tesla missed market estimates for the third quarter deliveries on Monday as the automaker was forced to curb production due to planned factory shutdowns. The electric vehicle maker handed over 435,000 vehicles in the 3 months to September 30, down to 6.7 from the preceding quarter. Wall Street, on average, had expected Tesla to deliver 450,000 vehicles, so down 6.7% from where they were expecting, according to 19 analysts polled by Visible Alpha. So, I mean, that was on Monday, but yesterday it had a huge rally, just a big move to the upside there. So basically, it just came right here, tested this supply zone or demand zone, and just see ya. So, I mean, I don't know if I'd be a buyer or a seller on Tesla right now because the marketplace is definitely spooked. It's definitely spooked, right? I mean, we know that it's at its expected move to the downside. We know it's at daily support. But the fact that we broke below the 200 on Tuesday, and then yesterday we tested that as resistance, and today we're rolling over again. I didn't figure we would have a big move, which we're still not. It's not. You're still trading inside of yesterday's range. So you're still an inside day. And you probably will be because tomorrow is NFP, non-farm payrolls. We did get data today, but the data that we got was not like super bad. In fact, it was bullish for the dollar, and the dollar is rolling over. There's your dollar price action on the day. So I'm glad I got out, I guess, because now I would be eating a much larger loss. Is there a possibility that it could do what I said still? Yeah, but at this point, I would just leave it alone. Right? We took our chance and we missed it. So at this point, I would just leave it alone. We'll see what it ends up doing tomorrow. But I don't think I would be messing with Tesla as far as being a buyer or a seller where it currently is right now. So trading under the expected range low for the day puts the VIX up back up into 1950. This is not looking good. I mean, it looks good if you have on a lot of bearish positions, but I don't have on any current bearish positions. I had a bearish position on AMD, but I closed it yesterday because it was in profit on Tuesday. So on this day, it was into profit, and I should have closed it because there's the 200 exponential. I didn't. I got greedy. I wanted more, right? And then Thursday, it opens and does that. So it put me back at a 1% loss. So I closed the trade down for a 1% loss instead of taking, a 1% win on that day. Because I said to short it up here, right? Last week, Thursday, I think it was last Thursday, I said, let's get short. So it hasn't moved anywhere. It's like unchanged on the week, which is good when you sell calls, but we sold them pretty far out. Today, those would be back into profit. So I should have just held them, but I have a rule. I won't let it get beyond that 1% loss. That 1% loss is huge. On Tuesday, I had a very big move. Yeah. Yeah, it could happen today also, but with the market going down, I don't think you will. Right? Tesla's down on the day 1.63%. Could it roll around? Could it, stop and then go up? Yes, it absolutely could. But what are you going to buy it against? We don't have a level there. You got the midpoint of this day and the 21 right under you, and you did break back out above the 50. But if you look at this structure, this isn't really considered a lower low. It would have to be below this in order to be considered a lower low. But this is so far a lower high. Right there is supply. So even if you were to get long right here, my max target would be 264. But it doesn't mean that it would stop there. I'm just saying, if you look at the overall structure, big down move, then you get a lower high, then a move to the downside, then what could potentially be another lower high here, right? The market's moving down. If the market breaks down tomorrow, it's probably going to be a pretty big down day. And at that point, I would expect Tesla to roll away from these highs. So one could put on a put spread on Tesla. The problem is putting on those put spreads are expensive right now. Because Tesla's got earnings coming up. So your implied volatility is 52%, 59%, 57%. You could go out to November where it's 37%. The spreads are 40 cents wide out here. $5 wide spread. So if we bought that, sold that, what would it be? Yeah, it'd be a 1-to-1 risk to reward. Let's go down $10. Buy this, sell that. It gives you a little bit better risk to reward, but now you need a much bigger move in price if you analyze it. Let's analyze it. Why is it so big? And where's the bell curve? I don't know where the bell curve is, but there should be a bell curve in there. But anyways, if we took this trade, well, something is wrong with my analysis tool. It's saying theoretically it'd be a max loss no matter where it goes. Something's wrong. I got something wrong here. Yeah, something is extremely wrong. I don't have the bell curve, for one. That's not right. There should be a bell curve, and you can see that the theoretical P&L doesn't move to the upside like it should. So it's not showing me where. Yeah, it's something's wrong with it. Whatever. Something's wrong with it. Yeah, that theoretical P&L should be moving up. There should be a bell curve here. I don't know. I've got something turned off probably. I don't know what's wrong with it. But anyways, it wouldn't be worth the trade. So if you got the kind of money where you could just buy an out of the money put or an at the money put, you could try that. If you think it's going to go lower, if you think it's going to go higher, you can buy a right at the money call. Just do it, kind of far out, because when with the implied volatility jacked up this high, you're going to lose money each day. That price is not in the money. You know what I'm saying? Each day that you're out of the money, you're going to lose. And Tesla's expensive. Even here, just 8 days from expiration, you're going to be risking like $750 at 8 days away. That's because the implied vol is so high at 48. Tesla is a fast mover too, so that's another reason why the options are so expensive. But yeah, tough market this year. It looks like I don't know what YouTube is bitching about, but it's bitching. So, all right, we'll go ahead and wrap it up. We've been live almost 2 hours. It's been a tough market for some. For some it has, that's for sure. Yeah, John, that's where I would watch the 50% retracement on yesterday's candle, see if that acts as support. If it does, you could buy a call, look to make a couple bucks on the call and then close it out. Right? I wouldn't look for like any expected long-term gains. Obviously, the market doesn't think that news was bad enough, because once we got the news, boom, you're up higher. So, could be a pullback. The rest of tech is down except for Nvidia. Nvidia is the only one that's up. So that's why your market is down. And then one last thing we can look at, Market Watch. You're almost correlated to the downside today. So you're betting against the marketplace going up when it's clearly not. A day before NFP, which is insane. But it is what it is. We'll talk to you